Hello and welcome to Philippine Market Wrap for December 31st, 2025. In this podcast, we bring you economic and investment news from Philippines and Southeast Asia in a clear and simple way, especially for beginners. Before we begin, a short disclaimer. This podcast is for general information and market commentary only. It does not recommend the buying or selling or any specific financial products. All investment decisions are your own responsibility. Today, we are looking back at the Philippine stock market in 2025. To be honest, for many investors, this may have felt like a year they were glad to see end. The Philippine Stock Exchange Index, known as the PSCI, closed to the financial trading day of the year at 6,052 points. For the full year, the index fell by more than 7%. This makes 2025 the most difficult year for the market since the sharp pandemic-related drop in 2020. At the start of the year, the mood was not entirely negative. Inflation was easing, possible interest rate cuts were being discussed, and there are hope for political stability after the election. However, as the year went on, the market sentiment clearly changed. Several serious factors weighed heavily on the market. First, a major corruption scandal, problem linked to flood control projects, shocked confidence, not just in the economy, but in institutions and governance. Second, economic growth slowed. In the third quarter of 2025, gross domestic product growth came at 4% below the market expectations. One comment stood out this year from the head of Philippine Stock Exchange. He said, "This market decline is not about numbers, it is about trust and confidence." That signal sentence captures the mood of the market for 2025. Market can handle slower growth. They can even cope with the weekly currency. But when uncertainty rises and confidence in governance fails, investors quickly become cautious. Ironically, Philippine stocks now looks inexpensive based on valuations. For the price to earning ratio are around 10 times, price to book value are just above 1. Compared with other Southeast Asian markets, valuations are relatively low. But being cheap does not automatically mean price will rise. What the market is really looking for is reason, a feel safe gain. In other words, a recovery in trust. 2025 was almost difficult year in the foreign exchange market. The Philippine peso briefly fell into the 59 peso per dollar range, close to historic lows. A strong US dollar narrowed interest rate differences and capital outflows from equities or for foreign investors, a weaker currency creates an additional layer at risk. So, is it the outlook entirely negative? Not necessarily. Corporate earnings have not collapsed. New stock listings are still expected. Inflation remains under control, giving the central bank some room to cut rate further. However, a meaningful market recovery in 2026 depends on the one key conditions: whether trust can be restored. The Philippine market in 2025 left us with an important lesson. Markets do not move on valuation alone, they move on belief. Demographics, domestic consumption, and corporate resilience are still in place. The long-term foundation remains. The key question for 2026 is whether capital will return. And the answer depends not on numbers, but on trust. That concludes our review of the Philippine stock market in 2025. Thank you very much for listening. We wish all a happy new year. Salamat kayo, Amping.